Welcome to an explainer video that gives us a brief overview into the issues surrounding world trade or international trade and globalization. With me, your host, Selena Lindahl, trucking on down the road of international trade. Quick overview, preview of what we're going to talk about. What are the trends in trade? What are the costs and benefits of trade, winners and losers? And what does trade have to do with inequality? So there's definitely a lot of things that explain trade flows. And looking at fairly recent history, there's clearly a lot of world events and policies that can increase or decrease trade. Going back even further, we look at the advent of specialization in trade, starting maybe in the agricultural revolution 10,000 years ago. So there's long-term trends and there's shorter-term trends. And this never stops, right? We have all sorts of arguments even today about whether or not globalization is a good thing and whether it should be increased or decreased. So you can really think of modern trade as in two distinct phases of globalization. In the first era, shipping costs dropped dramatically, and this is what led to an increase in world trade. And then you have world wars, and this leads nations to raise taxes on each other. So tariffs are just taxes on imports. And these sort of in a fight for competition, tariffs went up in the war period, and that slowed down trade. And finally, in this Globalization 2 phase, you have tariffs in decline after the war period. And those came down specifically by some things like the General Agreement on Tariffs and Trade. This is a global trade treaty, and that has become the World Trade Organization. These institutions have really helped countries bring down their tariffs, which is not an easy thing to do. Here's another look at these tariffs. For high-income countries like the U.S., tariffs have been pretty low for the last few decades and are getting lower still as a result of World Trade Organization and other trade treaties that get countries to talk to each other and force each other to figure out how to get trade more free. And then for low-income countries, who, as you probably have figured out, are the ones that were under colonial rule and as such were primarily extraction-based economies, where the colonial power would, extract raw materials and import them into the mother country for a more manufacturing complex situation. These guys need to transition from extraction-centered economies toward more complex economies. So they have traditionally had higher tariffs as a result in trying to develop their own autonomy and autarky with respect to importing goods from manufacturing powerhouses like the rich countries. In all this talk about the increasing age of globalization, we often forget that people are not allowed to move nearly as freely as goods and services and money. So what you're looking at here is a timeline for the U.S. of immigration. And you can see that immigration has its ebbs and flows, mostly explained by political movements. But sometimes, in the case of, for instance, Germany, whose population is aging rapidly, Angela Merkel decided to improve and loosen immigration restrictions into Germany because, like a lot of rich countries, what's needed is younger people to help fund the social safety net. So let's keep in mind that when we talk about globalization, we're talking about the globalization of goods and services, much more so than people. Although economists generally favor free trade and globalization, it's very clear that there are winners and losers. So let's walk through a little example. Let's imagine that the U.S. specializes in producing aircraft and China specializes in consumer electronics. And imagine that this is a change from whatever had happened before. So we're looking at the short-term impacts of this disruption, right, as we're moving between industries. So if you were a U.S. worker previously employed in the electronics industry, you now have to find work in your jobs are going to go away, right? And you're going to have to find work in where the new jobs are, which will be aircraft manufacturing. So if that is a nice, easy shift for you, that works. But for most people, it won't be. So you'll lose out. In China, employment will expand in consumer electronics. So in the short run, people who lose their jobs clearly are losers. and the people who are entering the jobs that are newly created are going to be gaining. And for now, let's ignore the effect on the total size of the economy. We could make the case that specialization and trade do create economic growth, but we'll return to that in just a minute. Going further with the idea of the sort of the costs and benefits and the winners and losers, let's talk about the capital versus labor. So what we mean here is the sort of owners of the factories and the workers in the factories. So the owners of capital, the owners of the factories, basically, in the US will benefit more than the workers because capital becomes relatively scarce as the production of aircraft rises, right? More factories are needed. And so if you own factories or if you build factories, that's going to be good for you. And since it's usually the wealthy that hold more of these type of factory owner positions, we would predict a rise in inequality as workers lose out and the owners of these factories gain. In China, it's going to work differently. So in China, workers are in higher demand now, and wages rise as a result of that. And lower unemployment lowers the cost of job loss, and firms have to raise wages. So workers benefit for both of those reasons. They're not as stressed out about finding jobs. They're not going to be out on the street destitute because jobs are more plentiful. And wages are rising, so the factory owners' profits will be squeezed. And so workers benefit more than owners, and we would expect inequality to fall. So this is just a taste of how complex any discussion of trade and globalization has to be. Anytime somebody tells you it's simple, they're lying or they are naive. Or maybe both. All right, so what about the impact on growth? Clearly, specialization and trade are what Adam Smith said would be the things that create the wealth of nations. And so allowing specialization and trade to happen, it follows naturally that we should allow that between countries as well. And so if you are a free market capitalist believer, you should also embrace globalization, at least the idea of trade between countries. And what that looks like, look at the top two pie charts here. We have in the U.S., let's assume U.S. and China both start over on the left here. And the U.S. is going to experience growth with greater trade. Any country will. And the U.S., by virtue of already being more a wealthier country than China, is going to have slower growth. That's just how it goes. It's easier to grow at the beginning than it is as you get to later stages. And that growth that we discussed is going to benefit the owners of capital more than the workers. So in blue, you see the profit which is capital's slice of the pie, the share of national income that goes to factory owners, and wages. So wages are in red. So we see growth and an increasing share down to the owners. Now in China, we get 40% growth. We already talked about why it's higher growth, and a rising share of national income going to workers. So this sets up all sorts of interesting political infighting and policies probably as a result, and conflicts between groups. So sort of in a nutshell and summary of what we just talked about, and adding a few new things as well, humans have not always been open to trade. Trade has often been seen as a competitive thing. Specialization and trade are responsible for lifting us past subsistence and into the modern era of growth, to be sure, but there are winners and losers, and so trade remains controversial. And that's your introduction to world trade.